Bitcoin emerged after the 2008 financial crisis. Distrust in traditional financial institutions was immense. People sought a system not controlled by governments or banks. From this, Bitcoin was born. Satoshi Nakamoto envisioned a decentralized digital currency. This currency would empower individuals and offer financial freedom. Bitcoin operates independently of central banks. No government regulations or intermediaries are involved. Transactions occur on a public ledger called the blockchain. This makes Bitcoin resistant to censorship and manipulation. It ensures transparency and immutability in transactions. Early days were marked by skepticism and uncertainty. A community of early adopters recognized its potential. As more people joined, Bitcoin's value increased. This growth attracted investors and entrepreneurs worldwide. At the heart of Bitcoin lies blockchain technology. Imagine a digital ledger that records every single Bitcoin transaction. This ledger is not stored in one place. Instead, it is distributed across a network of computers. Each computer on the network has a copy of the blockchain. This distributed nature makes the system incredibly secure and resistant to hacking. When a Bitcoin transaction occurs, it is broadcast to the entire network. Miners, who are powerful computers on the network, verify and add the transaction to the blockchain. They solve complex mathematical problems to validate transactions. This process is known as mining. Miners receive Bitcoin rewards for their efforts. This process of verifying and adding transactions to the blockchain ensures transparency and immutability. Once a transaction is added to the blockchain, it cannot be altered or reversed. The blockchain acts as a public record of all Bitcoin transactions. It provides a high level of trust and security for users. As Bitcoin gained popularity, the number of transactions on its blockchain increased. This led to slower transaction speeds and higher fees. To address these scalability issues, the Lightning Network was developed. The Lightning Network is a Layer 2 payment protocol built on top of the Bitcoin blockchain. Think of the Lightning Network as a network of payment channels between users. These channels allow for near instantaneous Bitcoin transactions with very low fees. Transactions occur off-chain, meaning they are not immediately recorded on the blockchain. This reduces the burden on the main Bitcoin network. The Lightning Network significantly enhances Bitcoin's scalability and usability. It makes it possible to use Bitcoin for everyday purchases, micropayments, and even cross-border transactions. With its speed and affordability, the Lightning Network is poised to revolutionize how we use Bitcoin in the future. So let's talk about adoption and ETFs. You see, Bitcoin's adoption has been steadily increasing over the years. More and more businesses are beginning to accept Bitcoin as a form of payment. This is a big deal because it means that Bitcoin is becoming more integrated into our everyday lives. Now, ETFs, or exchange-traded funds, are another interesting aspect. An ETF would allow investors to buy Bitcoin without actually having to own it. This could potentially open the floodgates for institutional investors, making it easier for them to get involved in the Bitcoin market. In essence, both adoption and ETFs are crucial in driving Bitcoin's growth and acceptance. All right, moving on to scarcity and potential. Bitcoin is unique because it has a fixed supply of 21 million coins. This scarcity is one of the key factors that drive its value. Unlike traditional currencies, which can be printed in unlimited amounts, Bitcoin's limited supply makes it more like digital gold. And let's not forget the potential. Bitcoin has the potential to revolutionize the financial system, offering a decentralized alternative to traditional banking. It's not just about the currency itself, but the technology behind it, blockchain, which has countless applications beyond just finance. The scarcity of Bitcoin, combined with its potential, makes it a fascinating and potentially valuable asset.